Welcome back. You're watching Traders Corner, and joining me as always is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we'll start with the international and local markets, because there's quite a bit of divergence actually. If you think about the fact that the S&P has now kind of broken out, moved up, and the top 40 seems to be utterly marooned at the moment.
That's right. Our market is extremely dull, and we'll get onto that in a minute, where we show how range-bound the top 40 is. But let's quickly have a look at the S&P 500 as we do at the beginning of most shows. The chart of it is up on the screen at the moment, and what I've been going on about for the last couple of months is the fact that this index does continue to make higher lows and higher highs, and that is relatively constructive in its own right. And you can see that recently we've continued to do that. We've been within this upward sloping channel now since April, and we've recently bumped up against the upper boundary of that channel. And last week on the show, I pointed out the fact that this 2800 area on the S&P 500 was fairly important. There was the possibility that a small little head and shoulders pattern was beginning to form over there, but the fact that the market has actually reversed up off of 2800 and moved nicely higher now most likely negates that head and shoulders, which makes it a failed head and shoulders, or you can also call it a head and shoulders continuation pattern. So that, in all likelihood, is fairly bullish. I've mentioned on many occasions this gap up at 2850 from January, and we've been up and traded up into that gap over the last week or two, and it looks as if we'll make another attempt to go up into that gap, and quite possibly even go on to test the recent, or not the recent, but the prior highs, which was at 28.75 here. Yeah. And if that can be breached, then we could actually see this market go on to new highs, as we've seen happen with the NASDAQ and with the Russell 2000.
Okay, so that would be fantastic to see. The same thing cannot be said of the JSE, which just, I thought it seems to be sort of narrowing towards some point, but yeah. I'm not sure what that will end up in.
No, and I'm also not sure myself. I mean, you can see here, this is our top 40 future that we're talking about here, and it goes back to April of this year. So you can see how this market has really just tracked along sideways within that range. 49,000 is the bottom of the range. 52,500 is the top of the range, and now we've got a range within a range over here. Yeah. So 50,150 is the bottom of that smaller range, and 51,500 is the top of that smaller range now. So it's very difficult to say from this point whether we're going to break to the upside or to the downside of that smaller range, and I really don't know. I guess we'll just have to wait and see and follow that once it happens. But it makes for difficult trading locally, because this market is just, it's dull, and the volumes are so thin at the moment. And this week is also likely to be a thin week, because private schools have gone on holiday, and it's a holiday shortened week because we've got the public holiday on Thursday, which of course means that nobody works on Friday. So effectively we've only really got 3 days of any semblance of economic activity in the country this week. Which makes for very quiet and dull and boring markets. And as a consequence, the rest of our show is not really going to be talking much about the South African market. We're going to look offshore for something.
Well, it is probably about time that we do, because you have admitted that the offshore segment of the Traders Corner portfolio has been rather quiet this year. Although, having said that, you initiated a short position in oil, in the price of oil last week.
Yes.
How's that working out?
Yeah, it's working. So here's our chart of Brent crude oil going back over 6 months, and what I'd identified with the chart here was that the upward trend that goes back, in that uptrend here shows going back to April, but in actual fact, if you were to zoom out on this chart, it goes all the way back to about a year ago, to June of 2017. That upward trend was recently broken to the downside on the move below $75 per barrel. That was in early July. And what's happened subsequently is it's rallied back up, and it's actually gone to retest the underside of what was previously support line. Now that becomes a resistance line. And that also happens to be the underside of the 50-day moving average, where you can see that blue line has actually begun to turn downwards, implying that the 50-day moving average has begun to roll over. And I always look at the 50-day moving average as a fairly good read of medium-term momentum. So in this case, it means that the medium-term momentum is beginning to roll over, and we've also got that technical break that I've referred to. And there's a little rising wedge pattern that formed through the latter part of July over here. Now, last week on the show, we initiated a short position on Brent crude oil. We went short of 100 barrels worth of Brent crude oil at a price of $75.50. That was on a November futures contract that we're trading here. And you can see that that rising wedge has now broken to the downside, so the trade is working out for us. And we're looking for a move down potentially to the 200-day moving average here, which comes in at about between $69 and $70 per barrel. That's where I'm looking for. So at the moment we remain short. The trade seems to be working, and the chart structure here continues to look as if it's gradually rolling over.
Yeah. Okay, so that is an active position that you have in the offshore portfolio. When you mention offshore shares that you want to have a look at, these are all potential trading opportunities, yes, but none into which you've actually entered a trade. So talk us through them. Yeah,
that's it. We're going to look at 3 US stocks this week specifically, which are all looking relatively promising from a technical perspective and from a fundamental perspective. And they're all potential long positions. Okay. So I'll be having my eye on all of these this week. And there's a good chance we may enter a trade in one of these stocks or more during the week ahead. So the first one is Berkshire Hathaway. That's obviously Warren Buffett's company, needs no introduction. This is Berkshire Hathaway B units, because the A units are so unbelievably expensive.
I mean, they're a few $100,000 a piece.
Yeah, they're properly expensive, so it's out of the reach of most people. So they created the B unit, which is somewhat more affordable. It trades at $200 per share here. And what's evident here is that the stock gapped up recently. There was quite a powerful gap to the upside, and it's since consolidated into a nice, healthy little triangle pattern over the past 2 weeks. It has now begun to break to the upper end of that triangle pattern. So that, for technical purposes, that's a bullish break to the upside, and in all likelihood, it should open another leg to the upside. And overnight, while we've been, prior to recording this show, and it's Monday, by the way, that we're recording this show, results have come out and they've beaten the market's expectations. So that probably is reason enough for the share price to push on higher. Yeah. The break here above $200 really is a bullish break. And that opens potential upside, just a near-term upside, to about $206 per share. So if one was to look to trade this, you'd look to buy it around current levels, put a stop loss below the bottom of that triangle pattern, which sits at about 197.50, and you'd look for a move up to 206, maybe even higher, but that's a minimum sort of short-term target here.
I mean, that almost suggests that you would have to do it now, because if you're going to look at the risk to reward ratio, if it does move out quite strongly from its present level, then you might have missed the boat.
Well, this is it. So, I mean, as we sit here, obviously the US market's not open at the moment. It opens in the evening or late afternoon our time. So if I see an opportunity to get involved at around about $200 a share, I will. If it runs away, well, then I'm not a believer in chasing things. Yeah. So I'll monitor it carefully, but it does look good. I mean, to me, that's a good-looking technical setup. Also, the fact that that gap up from 2 or 3 weeks back has not closed is also encouraging from a technical perspective as well.
Okay, so that's Berkshire Hathaway. And as you mentioned, we're recording the show on Monday, so we'll be 24 hours out of date or thereabouts once we actually broadcast. The other 2 shares, first one is American Express.
Yes.
That's a real old economy kind of stock.
It is to some extent. But it's looking good. From a technical perspective, this does look pretty good. You can see consistently higher lows and higher highs over here. It's retraced recently back towards the solid upward trend. That trend goes back to February, and you can see how it joins all the low points on that chart through the last couple of months. There's a little falling wedge pattern that has formed over here over the last week or so. That is typically a bullish continuation pattern. It will usually break to the upside and give a continuation move higher. So, and it has in fact begun to break above that falling wedge structure. So in all likelihood, that should see it moving back up to the recent highs at about $105 per share, if not higher even. So again, here, if one were to try and look to buy it at around about $100, stop loss below, say, $98.50, and you look for a move up to about $105 as a minimum target here.
I mean, and fundamentally, would you look at an American Express in the context of what Visa and MasterCard have been doing? Because I think Visa's been a really strong performer, or do they have slightly different?
No, they're similar. They are similar, and if you track the share prices of those, Visa, MasterCard, American Express, there's certainly some degree of correlation between those. And you're right that MasterCard and Visa have been particularly strong.
Yeah. And the last one is a very new economy share, and that is Alphabet/Google. Yeah. There are a lot of fears that these shares are completely overblown, overhyped, massively expensive, but Alphabet actually doesn't have massively high PEs. So
No.
on a fundamental basis, it's maybe not quite as pricey as some other of the FANG stocks.
Yeah, and I've seen quite a lot written recently about the FANG stocks and about how there's actually quite a lot of discrepancy between them. Obviously, Facebook disappointed with earnings recently, and that's got a lot of people chattering about this. But if you look at the valuations of the different stocks within the FANG's universe, you're right, some of them are very expensive on massive valuations. And then you get the likes of a Google or an Alphabet, which is actually not outrageously expensive on its valuation. So be that as it may, yes, is there a FANG tech bubble? Perhaps there is. But at the same time, has it burst? Well, not yet, I don't think. So there's momentum there. And whilst that is the case, as shorter-term traders, we would look at opportunities to try and play that momentum. And I suppose you just respect the momentum, respect the trend until it breaks. And in this case, Google's shares here do look strong. You can see that undeniable rising trend over there. And again, a little bit like what we saw with Berkshire Hathaway, there was a gap to the upside recently. The price has subsequently come back. It's actually closed that gap, and it looks as if buying interest is starting to form again. There's also a little falling wedge pattern here, and it appears as if it's starting to move up. The $1,200 per share level seems to act as support here, and in all likelihood, it looks as if we're about to embark on another leg to the upside for this one. So that could see it moving back to the recent high at 1275 and quite possibly on to a new high beyond that.
Yeah.
So I think whilst it's above $1,200, you've got to remain bullish here.
Okay, so 3 stocks to watch in the week ahead. Yeah. And Garth, what does the portfolio look like? I imagine then locally nothing different from last year.
Yeah, nothing locally changed. These are trades that we've closed out recently. We still sit with a gain of 17.5% on the South African portfolio year to date, so that's good. And then offshore, we've just got that position in Brent crude oil where we are short 100 barrels. And that has made a bit of money for us on a mark-to-market basis over the last week. So we're up 5.3% for the year to date there. So looking a little bit better. And as I said, we'll continue to monitor those 3 stocks that I've mentioned for the week ahead.
Yeah. And then just before we end off with Garth, you've got a trading course coming up.
I have. It's going to be a spring promotion as we get all excited about the
joys of
spring. So it's on the 15th of September. It's a high probability trading course. I'm again going to run it at a promotional price of 1,990 Rand per person, which is a discount to the normal price. And because I'm in such a good spring mood, we're also going to throw in a 3-month subscription to Traders Corner if you attend the course as well. So anyone that would be interested in attending, please send me an email, garth@traderscorner.co.za, and I'll send you all the information.
Do you get people questioning the utility of trading courses?
Yes, you do, and it's strange. I find people say to me, "Oh, 2,000 Rand for a course is a lot of money," and I'll look at that and say, "But it's not a lot of money." I see people that are willing to drop tens of thousands of rands in the market, doing silly things, following silly trading methodologies. Come on a course, learn how to trade. It'll cost you 2,000 Rand for the day, but it'll save you a lot of money in the long run.
Okay, that's the Traders Corner plug of the evening. And then just a reminder, viewers can get a weekly alert.
Yes, if you go to traderscorner.co.za, you go to the middle of the page and you'll see there's a link there for a free weekly email. Click on that, enter your details, and we'll send you an email every Tuesday at lunchtime detailing what is coming up on the show for the week.
Cool. Garth, we'll leave it there. Thanks as always for joining us. Garth McKenzie is, of course, founder and editor of Traders Corner.